Why knowledge alone will never make you a profitable trader. Let me ask you something honest. You've studied the charts. You've watched hundreds of hours of trading videos. You know what a liquidity sweep is. You understand market structure. You've read about risk management more times than you can count. So why are you still losing money? Here's the truth that most trading channels will never tell you. And it's the one truth that will either change your trading career or keep you stuck exactly where you are right now. Welcome back. If you're new here, this channel is about one thing: building traders who actually last in these markets. Not overnight success stories, real, sustainable, profitable trading. Today's topic is something I genuinely believe is the #1 reason why talented, educated, hard-working traders still fail, and it has almost nothing to do with their strategy. Knowledge alone is not enough. By the end of this video, you're going to understand exactly what is enough, and more importantly, what you need to start doing differently starting today. Let's get into it. Here's something that should stop you in your tracks. We are living in the greatest era of trading education in human history. Binance Academy, CoinDesk, YouTube, Twitter, TradingView. Free courses, free analysis, free on-chain data, all of it available 24 hours a day. And yet, studies consistently show that the vast majority of retail traders lose money year after year. More information than ever before, same results as always. That tells us something important. Information is not the variable that's holding people back. So what is? It's what happens in the space between knowing what to do and actually doing it when real money is on the line. That gap, right there, that's where trading accounts go to die. Let's talk about the first gap, and this one's going to feel familiar. Every trader knows you shouldn't over-leverage. It's literally day one knowledge. It's in every beginner guide ever written. But then, the market pumps 15% in 20 minutes. Your portfolio is moving, everyone on Twitter is talking about it. Your hands are on the keyboard, and the rules disappear. You increase your position size, you remove your stop loss just this once, you tell yourself you'll manage it manually. And just like that, a trade becomes a gamble, and a gamble becomes a hope. And hope in trading is the most expensive emotion you can have. Professional traders don't trade what they feel in the moment. They trade what their system allows. Nothing more, nothing less. Discipline isn't about being a robot. It's about building rules specifically for the moments when your emotions are loudest, because those are exactly the moments when your judgment is worst. The second gap might be the most dangerous one because it's invisible until it's too late. I want you to imagine two traders. Trader A has a basic strategy in strict risk management. Trader B has an advanced, highly sophisticated strategy and sloppy risk management. Over 1 year, who do you think survives? Trader A, every single time. Here's why. A strategy with a 60% win rate, which is genuinely very good, can still destroy your entire account if your position sizing is inconsistent and uncontrolled. One bad week, one over-leveraged trade during a volatile news event, one moment of overconfidence after a winning streak. Gone. Before your next trade, ask yourself one question. How much of my total capital am I risking right now, and why? This is the one nobody wants to talk about, because it requires looking inward, and that's uncomfortable. Markets are not just charts and price movements, they are emotional battlefields. Think about the last time the market was crashing. Every headline was catastrophic, everyone was panicking, your portfolio was deep in the red. How did you feel? Fear, anxiety, the urge to just make it stop and sell everything. Now, think about a market top. Everything is pumping. Social media is euphoric. People are posting massive gains everywhere. How did you feel then? FOMO, greed, the feeling that you need to get in right now before you miss out completely. Here's the problem. Fear peaks exactly when the best buying opportunities exist, and greed peaks exactly when the risk is highest. The market is literally designed to trigger the wrong emotional response at the wrong time. Can you follow your trading plan after 3 consecutive losses without abandoning the strategy? Can you take your profit target without FOMO pulling you to hold for more? Can you sit patiently on the sidelines when there's no clear setup? Those questions separate traders from gamblers. In today's market environment, information overload is a silent killer. Too many signals, too many influencers, too many conflicting opinions about what the market is going to do next. And the result? You hesitate on real setups. You overtrade trying to keep up. You become paralyzed by analysis when clarity is what you actually need. The most consistent traders are not the most informed. They're the most focused. They have fewer inputs, a clearer process, and the discipline to ignore everything that doesn't directly serve their strategy. And finally, this one might surprise you. Some of the most analytically intelligent people have failed spectacularly in the markets because the market does not reward intelligence, it rewards consistency, emotional control, risk discipline, patience. A simple system executed flawlessly will always beat a complex system executed emotionally. All right, so we've talked about what doesn't work. Let's talk about what does. Profitable trading is built on 5 things working together. Not just one of them, but all 5 consistently. Number 1, a structured, rule-based strategy. Not vibes, not gut feelings. Written rules that you follow every single time. Number 2, strict risk management. A defined percentage you risk per trade. A maximum daily loss limit. Rules that exist precisely for the days when you feel invincible. Number 3, emotional awareness. Know your triggers. Know when you're trading from fear or greed, and have a system to catch yourself before it costs you. Number 4, a trading journal. Review every trade, not just the losses, the wins too. Look for patterns in your behavior, not just the market. In number 5, a long-term mindset. One bad week means almost nothing across a 3-year trading career. Stop measuring yourself trade by trade. Measure yourself across hundreds of trades. Knowledge is the foundation, but habits build the house. So let me leave you with this. In these markets, information has never been cheaper, more accessible, but discipline, real, tested, consistent discipline, remains one of the rarest things you'll find. The difference between traders who make it and traders who blow up and disappear is not what they know. It's what they consistently execute when real money is on the line, and every emotion in their body is telling them to do something different. If this video added value to your trading mindset, leave a comment below telling me your single biggest trading weakness right now. I read every single one, and your answer might become my next video.